The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Hi everyone, Basil Chapman sitting in for Tom O'Brien. Usually I'm doing my 11 o'clock till noon show, which I will do today as well. But today I'm sitting in for Tom, so it's my pleasure and honor to be here. And we're looking at the Dow down 123 at 70,550s. S&P's down 13 at 2,055. Comp index is down 50. So that's down 1%. It's way more than this 0.65% of the down the S&P. It's down at 49.41. The VIX index is now at 18.37. It's just beginning its climb to the upside. Still needs to break the 19 resistance. And what we're really looking at here is a situation where I'd spoken about this with my subscribers to my on the show, actually, my Tiger Technicians Hour for quite a while. I've been talking about until we see the market respond by going lower to news and then interpreting that news, whatever it is, as bad news, and you have this dark cloud cover. At the same time, as you see the volatility index actually start to screen to the upside into the high teens, you will constantly have in the Dow, look at this chart, let me just lift this up here, you will constantly have this trading band with tremendous support in the 17,500s and tremendous resistance in the 18,170s to 18,220s. And that's exactly what you've seen for 6-7 months now. It's actually more than that, but this is making 6-7 months because basically that's what you can see in front of you. But look at this. What you're seeing is that the MACD, the moving average convergence, divergence, and the slow stochastic have been very negative. The price has been at least for a week and a half under this maroon line, the 9-period exponential moving average, before it walked the 9 EMA on the upside, and it treated it as a barrier when it came down, and now it's back to being a barrier. So what we're looking at is a situation that says lower highs and lower lows. The target that I've had right there, the little circle of the inside of this declining wedge that you can see here with lower lows and much lower highs, suggests that by the, let me look at the date, that would be by the 13th of July, that's by Monday, there should be a test of the 17,000, what did I say that was? 17,420s. And my big deal that I've made here for months, actually, has been as long as 17,500 becomes a trampoline cushion, you've got to consider that this rotational correction, sideways correction, with some of the very best sectors being the ones that can move the market just by a couple of it's fewer and fewer stocks that are able to move the market higher are going to move the market higher, but to a lower high. That's exactly what we're looking at. But we're at the point now this week where we're starting to see a breakdown in some of the key indexes, not yet with the IBB. The IBB is I'll look at that in a moment. But the biotech sector is still the place to go for these fund managers. Every time there's an opportunity, they grab them because they're rewarded within an hour or two. I think that's going to change, and I'll explain that as we move along. I wanted to show this pattern on the Dow. Rotational correction, sideways until 17,500 breaks. When you close decisively under 17,500 for 2 out of 3 daily sessions, watch out below. That's all I can say. Okay, let's move on. So we've got the, I had a quote in the Dan, let's see, where is that? Let me just find it. Let me find it. It is right here where Trader Town speaks about the SOXX. Well, the SOXX is the 200% long, the SMHs, which is the semiconductor index. That index, which I should mention just for clarification, subscribers to my opening call, we've been short for quite a while, is down at 53.19, down at 104 in leg C in the Chapman wave methodology of counting the troughs to the bottom, the little V-shaped lower lows, and on the way we call them on the upside peaks. And here you've got leg C about to test really important, which I drew in a little while ago, trend line support. Let me just let me open this up so you can see it. Why do I mention the SMHs? A very important component of the whole market. It's essentially telling us about the economy, telling us, even though computers are basically have been commoditized for such a long time, look at how important it is. It went, the SMHs last month went to recovery highs at 60.13. Trading now down 7 points from that, 11%. This is a big deal for this market. And there's more than a one-to-one expansion to the downside in the daily chart. So right here is where there should be support. If there isn't, 52.62 would be the next level of support. 53.20, another point to go. But the weekly chart suggests that's not the end. It's going into the 51 and then the 49s over a period of weeks. And that's the way I'm looking at it. And it's making a potential hat-trick top in the monthly chart, the peak E monthly, peak D weekly, peak F daily in the Chapman wave methodology. All right, so let's go on with the story of the market. The S&P is down, SPX, a little bit of a bounce here. It's down 10 at 2,058. You can see that it's gone to a lower low, and it touched the 2,055 simple moving average, 200 period moving average, that's 200-day support level, and the low today has been, let me just move this aside so that I can see, the low has been 2,055.90. So the next level is 2,051, and that's the exponential moving average. Didn't even get to, over the last 2 days, on the bounce in the market, the rally attempt, didn't even get to the 2077 level of the 9-period moving average in the S&P. This is not good action for the monthly. It also made a lower low. This is now leg B to the downside in the monthly. If the market stopped right here and it was Friday at 4 o'clock, I would have to say we've gone from a sell signal to a sell mode. I always have to wait for the week to finish because you're looking at a bar that's a weekly candle. Don't try to anticipate what's going to be on Friday. You can think about it. You can designate certain points that you want to do things, but don't conclude that what the market is at right this moment, first couple of hours of the second day of the trading week, with another whole session to complete today, Wednesday, Thursday, Friday, that we've got a conclusion for Friday's candle. No. My guess, now that's something completely different, is that we're going to close quite ugly on Friday. But that's just a guess, and we are trading to the downside in my opening call. Almost all our positions are on the short side. I don't know yet if we got a quick jab at along that we wanted this morning. We'll talk about that. We'll talk about other things as we move along, to say that there are some stocks that are holding very well at this particular time. They're under the radar stocks. Let's move on. So you've got the S&P. I gave you the parameters. Now let's go to the QQQ series. Most people look at the QQQ rather than the comp index, which is the very broad NASDAQ index. We're looking at the NDX 100 trading vehicle, the Power Shares QQQ Trust series, trading at 106.81. I say to subscribers, 106.64 is absolutely key to hold today. And if it doesn't hold that, you're starting to see a break of this long-term, it's actually a long-term weekly up channel, and the level that you see here, the green line and the red line, that's called in the Chapman wave methodology the inside track support area. It should be a propellant, not a repellent. And if it breaks under it, the Q starts to trade in the 105. If they close below 105 on Friday, this whole area that was support for months, almost a year in fact, you will find that it's becoming resistance. Certainly 108.49, the 9-period moving average, will be the second week that it closes under that. That's going to be very important. We can talk about the monthly, but the monthly has got a long way to go. But in the meantime, back in the range, we did not make that leg D. We missed it by 3 cents or something, going to 111.17. So there we go. Now I'd like to look at the, we can do them all because we've got plenty of time. IWC, just a major index. It was just the leading index, the iShares Microcap ETF, you probably haven't even heard of it, the IWC. And the IWC is trading at 79. It made an all-time high of 84.28 back in June on the 23rd. Peak G, unusual peak G in the daily. Peak F is almost certain to be a peak F if we close under 80 on Friday. I'd have to call this a peak F because of the chart formation and the technicals, but the monthly chart is the one that's really going to be intriguing. Why? Because at a G/C, it says it could still go to a D if it doesn't break under a 72, 71, somewhere there over the period of the next 3 to 6 weeks. But we're going to look at this intently and say, hey, something's happening here that is different to other times. And now I want to go to the IWM, which is the Russell 2000, way broader, 2,000 stocks. And it is not the micro caps, but that's a peak E if there's no new high this month. And that's number one. Number two is the candle that's formed, this long-legged doji, says a close below the low of last month of 123.03. We're actually under it right now at 122.73, down $1. That says be careful because the 9-period exponential moving average of 121.20, if that's taken out, all of a sudden you've got a pattern that says very poor MACD, the moving average divergence in the monthly. The stochastics at 82%. That's still very good, but the weekly chart did not confirm under any condition except for the unbalanced volume, which went to A, B, C, D, peak E. And this last move up in the IWM, and this says be real careful. We'll talk about the dollar, we'll talk about the euro when we get back. Basil Chapman sitting in for Tom O'Brien, and I'll be right back. Dow's down 107, S&P's down 12.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman sitting in for Tom, and let's just go straight to the numbers. We're looking at the IWM, as I said, down $1.17. Hey, wait a minute. Look at this. This is the New York Stock Exchange, the very broad New York Stock Exchange, and I know that Larry does a great. Where did it disappear to? Larry does a great deal of work with the NYA, and I just wanted to show you something here. The last move in the Chapman wave methodology, the idea is to identify the lowest, most obvious low bar, and then merely count each successively higher peak until you get to a D. At D, other things can happen. Sometimes it fails, as it did in the daily chart of the NYA at a peak C minus, but that was way under the previous high. So this is going to be very interesting because I had spoken about this yesterday. The weekly chart gave a beautiful signal at 11,254. The next week, that was the week of the 22nd of May. The next week, the 29th of May, confirmed that there was a down move and it was a peak D as the MACD. There's the MACD, the moving average convergence divergence, and the slow stochastic started to deteriorate. But it's the monthly chart that I've been looking at. And what I said yesterday is there's a good chance I'm going to have to renotate this. I had it and renotated, and then I thought, no, everything else has worked with the low that was made back in October. Let's see if this is going to be the same. And this looks like it's a failure pattern. And the NYA monthly chart, all it needs to do is close either here or lower on the last trading day of the month of July. And I would have to conclude there's a real good chance that that is the alternate wave count of A, B, C, and this is a D, not a C. And now you've got all the requisites that you need to see a deeper move to the downside. And that's really what we're getting. All right, let's move on. So the NYA is down 96 at 10,686. The next level of support is real close. It's right here at 10,659, 30 points, so less than 30 points lower. That was the week of the March the 13th low. My guess is we're going to go into this area right here, 10,000, just at about 10,620 to 10,590. That area is going to be where there should be a test of in a bounce formation. We'll see. Day's young. Now, I want you to just go to the TLT because the TLT is screaming to the upside. Now, what's really important about this, I know that there's been talk about 114.88. That's right there. That's the low. That yields will be going higher, and that's been the talk of the town for a long time, years, in fact. But in fact, if you look at the situation and you compare this with what's happened in Japan over the last 20 or more years, the concept that I had over 12 years ago, I don't even remember when it was, but it's as long as I've been at TFNN, which is over 12 years, I'd already been talking about it years before. So it was the Japanization of our bond yields. What the heck does that mean? What it means is that because Japan was forced through their weak economy to go to lower and lower and lower yields in order to encourage buying and building and the growth of the economy, which didn't work until just recently. I always figured that at some point we will have a serious decline in the market based on economic factors, and those economic factors would force the Fed to constantly keep lowering the interest rates. So when I look at this, this peak D that was formed in the monthly chart, yes, we've had a serious decline, but it's this monthly 27-year up channel that is just so impressive. It's actually a 31 years since the 1987 crash. But basically what we're looking at is this up channel that's formed. Now what's fascinating, if I do this, look, if I go TYX.X, keep looking at this chart, you see this is from 2006, you see this beautiful up channel. Well, when whatever company bought the rights to this particular index, they shortened the duration of, talking duration, we're talking bonds, that's funny. They shortened the chart. I used to have the chart going back to 1983, I think it was, and now I don't have it anymore. So this is the best I can do. But wait a minute, I found a way. Look at this. Look at this channel. Look at this channel. Look at this channel. That is the 30-year Treasury bond interest rate, 1981 all-time high to current price, which is, well, at the time was 16th of January, 2015. We're now into the first week of July of 2015, and we haven't broken out of this particular channel, this down channel, which basically started, let's call it in 86, 87. Let me just see the exact date. Was that October? Oh, there it is, October of 1987. For those of you, like I was, involved in the market on that particular October the 19th day. Very interesting. We won't go into that. Larry's got some terrific stories to regale you with. But look at this down channel. This is the Japanization of our bond yields, right? And we still haven't broken to the 4 point, I would say the 200-period moving average at 4.5% is it. We got to watch that. I'll be right back. Basil Chapman sitting for Tom O'Brien. S&P's down 14.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative market-safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. I'm sitting in for Tom O'Brien. It's the Money Master Show, absolutely, and Basil Chapman here. The dollar is up 73 cents at 97.03. It did hit 97.24. It is above this trend line resistance. There's an inside wedge being formed. But what's really important about this is that if you look at the left side of the weekly chart, you can see that you've got a cup formation that'll be, I wouldn't say confirmed, but it will have a much more aggressive stance if it can break above 97.78. Certainly if it can close in the 98s by Friday, this coming Friday. Now, look, I haven't been listening to the news. Do you really have to listen to the news? I was with some people over there on July 4th. There were some friends. We were sitting around. One friend suddenly said, I was speaking to someone I knew when I was back at UPenn, and he's Greek, and he went back to Greece, and he's a successful businessman. And I asked him about the situation there, and he said things are just unbelievably bad. It is just terrible. And this is a person who went to Wharton School. I mean, really understands, business. Both of them did. So I'm listening to this, and I thought, oh, that's interesting. That's kind of, that's my impression for what I see. And then another friend pipes up and says, oh, wait a minute. I spoke to a friend just 2 days ago, and who lives in Greece. She's Greek, and she said she's a physician, and she said, it's how can I put it? She said, instead of eating out 5 nights a week, we're eating out 3 nights a week. So I think it's a case of those who have it, and those who don't. I mean, that's always the case. And my contention is that until the news media starts to film as many people as they can, showing how difficult it is for them to live, how difficult it is for them to get bread, to get food on the table, to feed their families over and over until they make this a humanitarian thing. It'll be a financial crisis, and it has to be turned into a humanitarian. I'm just talking this on a purely pragmatic way. I'm not giving opinions or anything in terms of who's right and who's wrong. I'm just saying, I know the media. And until the media turns this into a humanitarian issue so that the IMF and everyone involved with giving Greece an opportunity to mess up once more. You remember I read to you that article from March of 2000. No different. It was a Greek headline. People were crying because their money was being devalued because the stock market was crashing, and they overspent by putting every penny into the market. I don't know what to tell you, but that's the only way that this is going to be resolved, and that's going to take time. So I don't see this as a 1 day or a 1 week thing. This is going to be ongoing. This is going to be the dark cloud cover that we can look at for weeks and weeks and weeks. This is my opinion in terms of the market. One of the reasons why we went short in so many positions, from whether it's the volatility index or the Dow, whatever it is. I'll show you one just in a moment that starting to fail very badly. The reason is that our stock market needed a trigger. They needed a trigger that would not be, that people would be focusing on something else. And they are. And everyone's saying, oh, it's the Greek thing, it's the China. Actually, most people don't even know it's the Chinese thing. Of course, there's more China than Greece. Is 10 times the debt that we could be involved in. Anyway, what we're looking at is a situation that says we finally have the dark cloud cover theme, and that is international chaos, right? Financial chaos, potential. And that says be very careful. You can have rallies, but there's a really good chance you're going to see lower highs and lower lows. Keep it as simple as possible. And that's what I'm looking at. With the dollar, we're looking at higher highs and higher lows. And that makes this level right here above that trend line. As soon as you can break in the dollar into the 97.80s, it's at 97.07 right now, and then try to touch 98s. Doesn't have to even hold there, but as soon as it gets to the 98 level, you're in a different area, because now all of a sudden the monthly is kicking in as being very positive and saying, hey, you could start a brand new leg C in the dollar above 100.39 in the monthly chart. Look at this major long-term monthly chart. Isn't that a thing of beauty? Look at that. For those of you who remember when I started here in 2002, late 2, but my newsletter started in 2003, I think March of 2003. Can you imagine how many charts I've sent out? I must have sent out at least 20,000 charts in all that period. At least it must be. There were 5, 6 a day. 30, yeah, multiply it. Yeah, it must be. Plus all the other charts. Well, thousands of charts. Okay. What we're looking at is that in the gold chart, remember with the XAU, I wonder if they've changed that as well. XAU, yeah, back in 2000, I showed this chart of gold. Do I have it at 2000? Yep, there's that bowl formation. I haven't updated all the notations. See this bowl formation? Look at that beautiful bowl formation. It took from 1996 all the way down to the low of 2000. I remember December at XAU at 44, I think it was. Yep, at 44, I got a major buy signal back in December, I think it was. Couldn't have been. It must have been November. November of 2000. I remember in the XAU getting a major buy signal. Look at this bowl formation. A bowl is different to a cup because it takes time to break out. And it bulls and it bulls and it has a beautiful left side, slightly lower low, slightly lower low, so then it flattens out. Then slightly higher high, slightly makes the semicircle on the right. I wonder what that's called. I always thought maybe it was an ellipse. I don't think it is an ellipse. And then what I had drawn in was this beautiful, this is where I really got this technique, the Chapman wave left side, right side price time match, like this. And it just missed, if I remember correctly. Let me just do this. So that's the left side. This is the right side. It's going to miss by a couple of months. Look at this, right there. Yeah, it missed by a couple of months and then broke out. And that breakout above that level was an impeccable, beautiful cup with a Chapman wave. This is called the cup and ladle breakout to a peak D, pulls back, starts another move in the XAU, which is the Philadelphia Gold and Silver Index, pulls back sharply, breaks out, goes to another D, pulls back sharply, goes from the 215s or something down to 63 in October of 2008, and then whoosh, it goes to the upside. Another peak D, pulls back sharply, sharply, and it hasn't made another upside move to a B's maximum that it's gotten to. So let's do this. Look at the dollar. The dollar is making a massive bull formation and a breakout to it didn't go to a D. This is still a B. If that's the breakout, that's still a B. And if this is a B, you should go to a C and a D. So the dollar looking out is exceptional. The euro, on the other hand, has done the exact opposite. It's breaking down. It's underneath the 200-period moving average. It is underneath the 9-period moving average of 1.14. It's at 1.09 right now. So I just wanted to go through a couple of things based on the Chapman wave methodology so that you can understand why I love to use different time frames. Look here, we've even got the dollar in leg D, possibly a peak D right here, very short term. Says you get ready for the dollar to just try to take a little bit of a breather before it tries to move on again. MACD's at 87 in the 120-minute chart. MACD's strong, the stochastics at 87. So now let's do this. So I wanted to show you that. I want you to show you the USD JPY, which is the currency pair, the dollar Japanese yen currency pair, making that H formation. Remember how important the H formation is? And then an alternate wave count F/C in the weekly. Monthly says it's a possible F. But wait a minute, isn't this like the dollar? Isn't this making a bull formation and it's broken out? And now it's just taking a bit of a rest after breaking out. Yep, and it hasn't broken to an all-time high of 124.130. In fact, the high is 120. Oh, it has 125.847. Now everything's coming back to me. It did break out to an all-time, no, a recovery high. In fact, we can call it. It did break out to a new 202 to 15, a new 13-year high. But it's way above the 200-period moving average and a little bit above the 9-period moving average. So it might need to consolidate just a little bit here. It's divorced itself from the dollar just a tad. If you're looking at the monthly chart, let's go back, look at the dollar, keep looking at the right chart. Look at that. Now look at the dollar. See, the dollar's taking a bit of a breather. So the dollar, Japanese yen currency pair has done the same thing. All right. Now what I want you to do is this, and this I think is going to be fascinating. The VIX index. Remember, you're going to have the dark cloud cover that sits there and it just keeps coming back and then it disappears. And then it comes back. And then that accelerations, if I was to do a waveform, and I'm waiting to see peak A, snore, 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 peak B, snore, snore, peak C, peak D, peak E. That's what you want to see, the acceleration. So this is the period where we're just beginning to get the recognition. Days young, weeks young, anything can happen. I have to just give you numbers. And if the volatility index starts to trade in the 20s in the next 2 days, we could get an acceleration. And this could mean that we're going to go to a short-term market bottom quite soon, have a pretty decent rally, and then start all over again based on the way the spacing of these monthly chart peaks are and the spacing in the weekly. If at any point in the next, what is today, Tuesday, between this Friday's close and next Friday's close, if there is a pullback in the VIX index underneath 1530, going into the 14 area, then we could see a pretty good counter-trend rally. But in the meantime, the tide has turned. That's what I spoke about before. That's why in my opening call, my newsletter, we are basically everywhere we can look, we are short. Let me just double check. I don't want to speak out of turn here. That's one that I put in a wrong number and we missed getting it. I don't usually do that. That was an error. And the other one is this one here. And that also hasn't come down. There are a couple of stocks that are holding really well. I've got a list of them. And I don't mind trying to trade the upside as well, if we can do that. Now, this is going to be very important. We should, at this particular point, remember we were looking at the VIX index. I should have looked at it. Let me look at this a little differently here. I wanted the VIX index. Where did it go? 120-minute chart should be right behind here. There it is. 120-minute chart right there. The VIX index 120-minute chart is trying to double top. So the area of 19.80, the high at 1330, that's 1:30 in the afternoon of the 30th of June, that's the area that's going to, anywhere around here, you could start to see the market at least attempt a little bit of a hiatus from the selling and try to have a nice counterpoint rally. Don't forget, I've got the Chapman wave trend gauge, which might have worked. It actually worked perfectly overnight. It flashed yesterday. It gave a very high reading. Let me just show you. This is this is for the overview and market today section of my newsletter. This is what I do. I wonder if I can show that here. Just give me a second. It will be right here. And I'll show you something very interesting. Yeah, look at this. This is what I do for subscribers every day. Just an incredible amount of information. I spend hours on my daily report. I really do. I love the market, so I have to do it. Look, I gave this whole this paragraph with all the different points of interest and points to focus on. And what I said yesterday, the high reading of 2.47 in Richard Arm's Trin index, the ARMS index, I call it the Chapman wave trend gauge. I only use the numbers, specific numbers. And what I'd said, the reading that we had yesterday said that within 1 to 2 sessions, the E-mini should have a very strong rally, 7 to 9 points on the upside, and that should translate into at least a rally attempt in the market. It doesn't always work that there's a rally attempt, or sometimes it works fantastically, but you've got to get the futures, and that was from yesterday. Well, we got the futures rallying to over 10 points higher early in the morning, and now look at it, the futures are down 22 points. So it did its job, but it didn't translate into the market opening higher. So what we're looking at is there's that volatility index. There's the arch formation. Remember the lowercase h formation in the 120-minute chart of the Dow? There's the 120-minute VIX, and now the VIX is attempting to retest that, and that cup formation can form some kind of a double top for a nice bounce. So in order to do that, let's see if we can go to a very short-term, because this is also a trading session that we have. Look at this. You went to peak. This is fascinating. Look, this is with no technicals whatsoever. This is the E-mini contract, the 10-minute E-mini. So what's the objective? To identify the lowest, most obvious low bar. There it is, right there. At 1 o'clock on the 6th of February, of July. And then it goes, what? To at least a D. Goes to a D, pulls back, jumps to an E, and then pulls back deeper. Then it goes A, B, C, D. Goes to that D, but then it spikes a little higher to an E. Then it goes, pulls back, and makes another move to a D, and another move to a D, and now it's plunged. Now it's ready for a bounce, a little bit of a bounce at 2,042 to test 2045. I'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
I got a question. Is there any reason in this day and age to still have the expense of having the emergency, whatever it is, come on? It happens on my TV every once in a while. The guy's talking about Greece, I'm trying to listen to it, and then suddenly, they've got this emergency warning test. In this day and age, test we will know within a split second via whatever it is we're looking at. All right. So we're back again. So what I've drawn in here is an arch formation that says you could bounce in the E-mini. You could bounce to the Fibonacci expansion to 61. Let's see, that would take to 2047. We're at 2045. Oh, it could even be a little more. Cyprus to address European Parliament Wednesday. All right. So what can these guys do? They don't have the money. So they somehow or other it's going to be a bailout of some kind. That's all there is to it. Or else they're just going to go down the tubes. I mean, I don't know what they're going to do. So anyway, back at the ranch, we're looking at the market. S&P's down 20. The S&P futures are down 20. The E-minis are down 15. The Dow's down 138, off the worst levels of the day. Now, what we're looking at here, let me move this away. So what I'm showing you is that in Chapman Wave methodology, you don't need all that other stuff. You just need the chart patterns and the wave count, certainly on the upside. Downside's a little different. Sometimes you do need a little bit more information. So this is Chapman Wave inside. This is called instant restart right there. And then you start back down again. All right. So this is a counter trend bounce. We'll see what happens. But they're not going to resolve anything at this particular point, and we'll see what happens. But the market is the market, and the market just needed some excuse to go down. You needed a headline, and you've got your headlines, all right? So that's the VIX index. VIX index in the 20s is intense selling pressure. I do this only on selling pressure and buying pressure. There's a whole complex way of looking at it. It's like the way I treat the VIX index. Do I care how it's made up? No. I've used it the same way for years and years and years. Some of the numbers change a little bit in my own methodology, just as it does with the TRIN. That's why I don't want to give out a number in case one day I'm changing the TRIN number and everybody starts to use it the old way. I just don't need that. And besides which, this is my own proprietary thing. It's fun. I've just kept it to myself, and I talk about it being too high or too low, and that's the way it is, and it seems to have worked 96 or 7%, or maybe even more of the time. I don't know how long it'll keep working, but that's the way it is. Now let's go to the nitty-gritties of what we want to look at. What happened to certain stocks? For instance, I have my Dow Quartet. I call it the Dow Quartet Index. And what is it? It's GE. Oh, what a horrible chart. Just broke the 200-period exponential moving average support. I had said that it better hold 20. What did I say to my subscriber? Oh, 25.80 something. 25. Right there. Okay. So we've got 25.83 was the high of the gap. And if it fills that, that's just going to be filling the gap and not filling the gap are two different things, both on the upside and the downside. So that says that if we're going to fill that gap, then the upside's even more limited to 2660s, 2680s on any big rebound. But right here, the stochastic and the MACD are still very weak, so any rebound would be transitory. And the monthly chart says that's the rectangle formation that the 2479 level is likely to be filled over the next couple of weeks. So now you've got GE. What about IBM? Well, IBM has been in a sell mode for a long time in the monthly chart with a hat-trick top. And the recent bounce and failure in the peak A is that's what I call the single leg A up syndrome. And that says be real careful. Now, as I'm looking at this, I see that we're just about to wrap up. Gosh, that went quickly. So let me do this. So GE is lousy. Triple M, the third one in my quartet, not looking good. And UTX, my G is the short-term pilot light. UTX is the more intermediate term. Not a good-looking chart. So I'm about to wrap it up here. Folks, stay tuned because I'll be doing the next hour. I'm going to go into more detail in more stocks. I want to look at Tesla, which I think might have given a sell. At least a reversal, short-term reversal signal. Look at a number of stocks in the next hour. Thanks for being here, and I'll be back at my usual time, 11 o'clock tomorrow. Thanks for being here.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.